Welcome to Midwest Sagacity. I'm your host, Midwest Savage. And on this channel, I guess, I was going to try to break that right left paradigm, break everything down, and then start busting everything down to, a base reality. But I've been hearing this a lot lately. Everyone lives in their own reality, which that's a problem because we all interact in one reality. So if we're all living in a different reality, no wonder, right? See, in ancient times, everyone agreed on a base reality. From there, philosophers, things like that, built upon that base, discovered new things, and then built a better base reality. And all that work that the ancient philosophers have done, religion, and even science, is just being thrown completely out of the window. And we're just going to accept that everyone has their own reality. And I think a lot of it stems from that dumbass saying that perception's reality. The reality that you experience in your own brain, in your life, that is unique and separate to you. However, that reality is still sitting upon a reality that we all have to interact in. And we all have to get to a point where we can agree what the base reality is. Now, the minute details, that is everyone's individual anecdotal evidence and their own experiences. But we got to agree on the base reality. Because if we don't, we are going to hit one of those great filters very soon. So that's what we're going to do on this channel from now on. We're going to start showing this to you, the underlying reality, the base reality, the binary code of the software that's running the simulation we're all living in. Because that code has to be agreed upon. Otherwise, there is no such thing as reality. Therefore, you don't think. Therefore, you are not. You don't exist. People that are living in their own reality are NPCs. The rest of us, we have to deal with you. And I think a lot of us are done with that shit. So, with that in mind, we're going to continue with the takeover of the banks, the collapse, as well as the central bank setting themselves up to be the only bank. And once that's occurred, it's only a matter of time before we have that one world currency everybody's been warning you about. Just because they did it a long time ago, they saw the documents, they saw the way that the big movers were moving. They just were way ahead of their time. But now is that time. So, I got a good video for you today. It's a guy from BlackRock, and that is one of the largest asset holders in the world. Trillions and trillions of dollars of assets. They basically own the world, along with Vanguard and a few other hedge fund companies. All these businesses that you think run the world, they don't run it. Hedge funds, they run it. BlackRock owns a large stake in a lot of the largest companies. And when I mean large stake, I'm talking anywhere from 25 to 50%. So this guy, he left BlackRock, started his own business. He's very concerned in the way that everything's going down in the economic world. So I'm going to go ahead and let him explain it. He'll be able to articulate it a lot better than I can. So with that in mind, let's get into it.
At least 6 shots from inside the building.
I mean, what do we got to do?
Parties are running out.
What is it that we can say to get people to wake up?
I'd like to begin today by updating you on our efforts to recover the debris. China has a high-altitude balloon program for intelligence involvement. The president also instructed the intelligence community to take a broad look at the phenomenon of unidentified aerial objects.
FEMA is now sending a team to East Palestine, Ohio. This comes more than 2 weeks after the train derailment threatened.
Reminds me of stuff that just happens at work. Just one person after another not doing their damn job, and everything would be okay if everyone just did their damn job. All right, we're going to get right into this video real quick. I just want to thank everybody who supported the videos. I've had a lot of views on my shorts. Also, about 85% of you guys that have watched the videos haven't subscribed. So if you could do that, do me a favor, help me out. I would greatly appreciate it. Now, one thing I want to mention before we get into the video is that I am really, really glad that I am seeing channels like this one that we're going to take a look at here, and others such as like Redacted, laying out the plan, laying all of this out, and now we're watching it unfold before our eyes. I just want to say I'm glad that everyone's starting to talk about this. It's been a slow thing. Me and my friends have been talking about all this. We've known about all this for over 15 years. Let's go ahead and get into it.
I'm Michelle McCory. Thank you for joining us. The Federal Reserve has raised interest rates to the highest level since 2007. And central banks worldwide continue to tighten in order to combat inflation. Well, my next guest warns that we are now on the brink of a global sovereign debt crisis. He's forecasting a very grim outlook for the United States, expecting a hard recession, more bank failures, a potentially controlled implosion.
And again, I want to give a shout out to this Michelle McCory. She rolled across my feed when I was doing some research on the FedNow service. I've never heard of this Kitco News and never seen her on YouTube before. And I don't know if it's one of them things where they've been, you know, out there for years and just recently exploding in popularity, or if somehow it's just missed my feed. But I want to give a shout out to Michelle because she has been having a lot of guests on that are really in tune with the financial institutions and kind of what's been going on behind closed doors. And I'm sure we're going to be seeing a few more videos with her in them because she's had some other people that have had some, you know, big ties to the financial system that are getting whispers from what's going on uphill. So I just want to give her a shout out real quick, and really for putting this video together, because this really hits what I've been trying to talk about with this FedNow service and kind of the state of the world and the reality that has been going on while we're all being distracted with this crap with Trump documents, Trump paying Stormy Daniels, Biden documents, UFOs. It makes you wonder. You always gotta wonder when they start putting out stuff that they've been denying for years and years and years. You gotta wonder what they're doing right now and distracting you with this other stuff while these other things are coming out in the news, but they're just taking a back burner to these highly controversial topics that have been, you know, just called, people have been called conspiracy theorists and all this, and then they start admitting this stuff just to distract us away from what they're doing right now. I don't know if she's been into this type of information for a long time or just recently. You guys leave a comment down below and let me know. Again, I've never heard of her, but she could have been really hitting this stuff for a while. and I just didn't know, but it kind of almost appears that she stumbled upon this and it's really got her interested, and she's doing a lot of videos on it, kind of like I did with East Palestine and the train derailment and everything. So here we go.
That leads to the consolidation of the banking sector with a very dystopian end result. Edward Dowd is the founding partner of Finance Technologies. He has over 3 decades of experience in finance, including working as a portfolio manager at BlackRock, the world's biggest asset manager. Edward, thank you for joining us.
Thanks for having me on today. Very much appreciate your time.
Well, I appreciate your insight, as terrifying as it may be. We have a lot to unpack, but let's start off easy with the latest from the Fed. The Fed raising by 25 basis points its range to the 4.75 to 5% range. Now, Jerome Powell is quite adamant that there will not be a pivot, saying that rate cuts are not in the base case, but the bond market is indicating otherwise. The 10-year Treasury yield falling to 3.5% on Wednesday. That's a drop from the peak of 4.2% in October. The yield is down 14% over the past few days. And you're saying that the Fed funds curve is pricing in a very different message from what Fed Powell will have us believe. Break that down for us.
Yeah, so I haven't checked today, but as of yesterday, after the announcement and after he spoke, the Fed funds futures curve, which is the overnight lending rate, is pricing in for interest rate cuts. So the bond market has spoken. And the other indication is the 3-month T-bill, which is not a futures contract. It, in this rate cycle, has been trading above the discount rate set by the Fed. And now, since the banking crisis has emerged with Silicon Valley Bank and others, the 3-month T-bill is trading below the discount rate. And so there is a flight to safety and quality, and people are shortening their duration, selling equities, and getting ready for a storm. That's the wisdom of the market. That's what the market is telling you. So people have different opinions about this, but I'm a market student, and when the market tells me something, I pay attention. And the market's saying that Fed Chairman Powell is probably going to have to not only just pause, but start cutting. And if this futures interest rate curve holds, I see an emergency Fed rate cut sometime in the next 3 months.
The reason why this is important, this is one of those things where you have to do the lesser of two evils. This is the spot that the Fed has put themselves in. Right now, you have inflation going up, and I mean not going up, but it's high. So they're raising rates to try to curb inflation. You don't want more than a couple percent of inflation. Reason being, it can get into a runaway spike because of inflation and things costing more dollars. It can tighten up the supply chain, which causes shortages, which then in turn also causes more inflation because people have to charge more. So they raise the rates to try to curb the inflation, slow down the economy, bring it back to normal. Problem is, inflation isn't going down fast enough. But because of these bank raises, and they keep having to raise it because the inflation is not going down. Problem is, it's causing the banks to fail. And if you start to get a systematic collapse, well, just like in 2007 and 8, they lower the rates to, darn near zero, and then they start pumping money in the system. Problem with that allows inflation to take hold again and start to rise. And then if you dump any more money into the economy to try to stimulate it, it will raise inflation even further. So that's why this is not a good thing if they have to raise the rates or lower the rates. In the short term, stocks and things like that will do good, but it's going to cause more problems down the road.
At a bare minimum. That's my prediction. And the other thing that I want to touch on that's very grim. And again, look, I'm not someone that likes to, be gloom and doom. I just study the facts and the asset markets and the economy. my team at Finance Technologies, we do a lot of deep dive economic analysis. We called a recession in November of last year. And at the time, we saw a recession that was going to be more on the order of the 2000, 2001 recession and the 1990 recession. Now, unfortunately, we're looking for a hard recession. Hopefully nothing systemic like the great financial crisis, but that remains to be seen. What happened in November of 2022 was very grim. The money supply M2 year-over-year growth rate went negative. And why is that important? That's only happened 5 times since 1868, including this one. The last time this occurred was 1930, the Great Depression. So this is a big deal, and it's an indication that credit is contracting at a very fast pace.
Okay.
And the lifeblood of all our economies is credit.
To say credit is a nice way to say debt, right? It's just a better term, sounds better, credit. Really all it is debt. The whole entire world economy is driven on debt. Reason being, you take out a loan, you go buy a house. That in turn will spark the building of another house, keeps people working. If we don't continue having debt and increasing debt, well, then the economy can't grow. Because they decided a long time ago, you could either have high unemployment at times, because businesses are going to go through a period where they're going to have a lot of growth, and then people eventually no longer need their services as bad. They got to cut back, and then you have unemployment go up. Keeping this in the 3 to 4% range is what they've been trying to do for a long time. Otherwise, unemployment can get as high as 30, 40, 50% if certain sectors of the economy are not needed at a certain time. There's a huge slowdown. So what they do is they keep driving everything with debt, so that way you can create more jobs instead of losing jobs, and you can keep those people employed, keep them working. Basically, making stuff that don't really need to be made, and we make it in a way and expensive enough where it's going to fail and they're going to need another one. So then therefore you just keep people working. And that's basically what they've tried to do, is keep everyone working. The contraction of credit, not a good sign. Not a good sign. That means they're not loaning out money. That means banks are tightening up because of defaults. That means there is money that is not being lent out and used, so therefore the demand for money is going up, but the supply is just not there.
Absolutely. And I want to break down that M2 thesis and what it means, but I just want to highlight what you said. You expect an emergency rate cut within the next 3 months.
Correct. Now,
what would likely prompt that?
Continued economic deterioration, more bank failures, something happening globally out of the Fed's control, like a sovereign debt crisis and or another major European bank going under. Again.
Or what about another pandemic? Wouldn't that really put the lid on everything? Because if something like COVID happened again and they had to shut everything down around the world like they have, society as we know it would just completely break at this point. That would be an event that would just put the nail in the coffin, and there would be no recovery after that.
Again, what's happened is was totally predictable. When you raise interest rates after 14 years of zero interest rates up 500 basis points in 12 months, you have bond losses in what are called safe. Even treasury bonds that are safe from a credit perspective have massive losses. So this is a duration problem. There's different types of risk in bonds. There's credit risk, which was the great financial crisis. This is interest rate risk or duration risk. And
so what he is saying here is when you go to put your deposits in the bank, instead of the bank keeping, a reserve of that money, a lot of times what they happen, you hear these, oh, they'll go loan this money out to other people. That does happen. What happens most of the time is that they take most of those deposits and they go buy bonds or stocks with that money to try to make more money. And that has been what has been propping up the stock market for a long time now, is the banks taking that money and dumping it into the stock market, which props up the stock market and causes things to go up. And then the more you do that, the more they go up, the more money they can make. Well, a lot of times they're putting them into these bonds or treasuries. And when the interest rate goes up, they start actually losing money. So the Feds raising the rates directly caused the banks to start to lose money to a point where they can no longer make any more loans. So the credit contracts. And on top of it, now people start getting scared. Smart people, the people with a lot of money in the banks, start getting scared and they start pulling their money out. Well, then that causes a bank run and the banks collapse.
It's just bond math. And when you buy a bond at 1% and it goes to 5%, you've lost a lot of money. Just that. And so these bonds on the bank's balance sheets and speculators' balance sheets have lost a tremendous amount of money.
Yeah. And you're anticipating a total of 4 cuts this year?
That's what the market's saying as of yesterday. That could change. What I suspect is going to happen, again, I'm not in the room, but I think the things will get worse, and and the market's anticipating they're going to get worse. And when they do get worse, the Fed will then have an emergency meeting and do a forced rate cut.
What kind of message would that signal to the markets? How would that be received?
So there's some interesting data on this. So everyone seems to think that when interest rates get cut, it's bullish for asset prices. That's usually true in a bull market. In bear markets.
And part of the reason being, when the rates get cut, the banks can borrow money, they buy the treasuries or whatnot, and they get charged a lower interest rate, because when they lower the rates, and then they go and take that money and go and, invest in the railroad or in a person starting up a company, things like that. So that's what normally happens.
That's not true. And we followed 3 different asset classes. And whenever these 3 asset classes are in sync to the downside, it's called the checkmate charts. They basically trump the Fed's ability to control the money supply. And we saw stocks peak in January of 22, commodities peaked in June of 22. And what we were finally waiting for was interest rates to peak. And we believe they have, as indicated by the 3-month T-bill below the discount rate. So when that happens, the Fed, and this happened in the 2000, 2001 recession and the great financial crisis. You have to remember the Fed started cutting rates in 2000, and the stock market didn't bottom until 2002. They started cutting interest rates in 2007, early 2008, and we didn't bottom until 2009. So if the Fed does what you suggest, or I suggested, and they signal that they're going to start cutting rates, that's when the real damage begins, because it's an indication even they are fearful of what they don't know and don't see. So it'll be a very bad signal to the marketplace, in my humble opinion.
Yeah, as you've said, typically bad news has been good news for the markets, but there comes a point where the markets start to lose faith that the Fed can, in fact, march into the rescue here.
And again, it's one of those damned if you do, damned if you don't situations, because if they cut rates, that will keep inflation high, and people don't want that because, businesses need consumers to come spend money. And when inflation's high, really can't do it, because you can't. Well, I mean, you can. You're going to spend all your money anyway, but the problem is you're not going to get nearly as many items. So that is why it's very bad for them to cut rates. But unfortunately, they're probably going to have to save these banks.
The Fed has been successful with its quantitative tightening program. I mean, that seems to be working. If we look at the M1 money supply, that's been down from $1 trillion from its peak in March of 2022. That was, by design. But you've pointed, as you just mentioned earlier, to the decrease in M2 as a sign that we are in for a very nasty recession, as it's historically indicated that. So break that down for us in greater detail.
So typically speaking, recessions cause a contraction in credit, and they're usually they get close to the zero line, but they never really go through it. So we've had instances where M2 got close to year-over-year negative growth, but never quite got there. Even in the great financial crisis, we never broke through the zero line. We're not even in the crisis mode yet, and we're already below zero. So what that says to me, and other market participants that I talk to, are saying that credit is there are defaults going on. Credit is being withheld by banks and credit card companies. So credit is contracting at an alarming pace, and this doesn't bode well for the economy as a whole, because unfortunately, credit is the lifeblood of the economy and the global economy, and that's going to be a big problem, and economic activity is going to grind to a halt over time. And now the good news is
to a halt.
Yeah, like in the great financial crisis, the good news is inventories will be depleted, and eventually they'll, it's a cycle. And the Fed has been trying to prevent this cycle from happening for 14 years, and unfortunately, all this easy money is going to make this hangover way worse than it could have been if they had let a recession occur earlier in this cycle. But for some reason, the powers that be didn't seem to think the system could handle even the tiniest of slowdowns.
So yeah, about 14 years ago, that put us at 2007, 8-ish. That was during what was called at the time the Great Recession. And, things started coming back, towards the end of 2008, 2009. Some areas started coming back, and then other areas, the recession caught up to it. I remember I was selling cars at the time, and it took 2 years to finally hit the car market. And then that's when you had the whole cash for clunkers deal and everything, which completely devastated the used car market, destroyed it. You want to know why you can't find a good used car anymore for a decent price? Cash for clunkers is what killed that market. They took all of the, lower priced vehicles at the time and gave them more money than those cars were worth, which destroyed all those lower priced cars, which then made the higher priced cars worth even more because there's no cars below it, and so on all the way up the chain until about 2010 it finally wrecked. So housing crisis in 2007 and 8 took 2 years, hit the car market, killed it. Kind of something similar that's what's going on right now, except for the car market got hit first. They had a huge boom over the last few years because they couldn't get vehicles in, and they were selling every car that they could get on the lot. But now that's not quite the case. Things have been slowing down for them quite a bit, and prices have come down quite a bit as well. So it's kind of the opposite. I think what's going to happen next is the housing market here pretty soon, especially if inflation keeps high.
So we've had this lethargic economic growth for, a decade plus of just very low economic growth.
Sorry to interrupt again real quick. What I was trying to get at there is that's when they started, their quantitative easing and lowering the rates till darn near zero to try to get keep the economy from crashing any further. And I was calling about in 2010, before the car market started to crash. I said, man, there's got to be another. It wasn't good enough. It didn't go down far enough. I was telling people that stock market needs to take another big dip here soon, because it just bounced back so hard. But that was because of that them just printing a bunch of money and quantitative easing, and they were taking all that and dumping it back into the stock market, propping it up, which was creating this huge bubble. And it should have popped at any time between 2010 and now. And they just now, for some reason, because every time they even mentioned raising rates, the market would tank 400 points, and then they just wouldn't do it. Well, for some reason, 14 years later, here we are. They decide to finally do it, and it's killing the market. It would have been a lot softer landing back then.
Now, because of this insane propping up of the global economies with, building credit debt upon credit debt, basically we solved the great financial crisis debt problem with more debt. So now we're in an even worse situation than we were in 2008. And so we have to pay the bill. And the bill is in the form of defaults and bankruptcies.
So, Edward, people can argue, we've heard this before. We've heard that we are at an inflection point several times before, and the can just gets kicked down the road. Why are you so sure that this is it, that this is the end of the road?
And she's absolutely right. We've heard this ever since 2008, that this is going to get worse and worse. And from 2010, people really were saying there needs to be a huge market adjustment. But the stock market just kept going up and up and up and up. And people have been yelling about this. And there's been these certain indicators that have popped up that were signaling these, but the Fed has been able to keep that off until now. When they raise the rates, it's doing exactly what they said would happen. Why now? I think it's because a lot of the indicators that were there for them to say these things. You're just looking at data, just like this guy. Problem is, now all the indicators are there, not just some of them.
Road this time.
Couple things. So what did we see last year? We saw some things we've never seen before in the markets. We saw inflation go from 1 to 2% up to 9% headline inflation, while at the same time the US dollar was advancing. In a commodity inflationary cycle, that's never happened before. Usually inflation is a function of usually a monetary phenomenon. So we saw two things, commodities going up and the dollar going up. And
now I don't think he ever actually explains why this happens and why it's so bad, but usually when inflation is going up, the price of commodities also go up. But what was actually happening was, and that's because the value of the dollar is less, so things cost more. What happened here was the dollar was becoming worth more and commodities were going up. So you had inflation even though the dollar's value was going up. Now, the only thing that would cause this is a contraction in the credit debt system. Banks weren't loaning money. People needed money. The supply was not there. Therefore, the demand for the dollar raised the value of the dollar. And that was happening all while we had shortages on a lot of these commodities, which raised the price of those commodities because the demand was higher for those as well.
My thesis then was the dollar going up is a sign of credit contraction globally, because a lot of international players have issued dollar-denominated debt. It's about 15 trillion in that debt. So as the dollar rises, it's harder and harder for them to pay us back. And so we suspect that due to the COVID lockdown, supply chain disruptions, that the Fed should never have started hiking in the first place.
And I just want to pause right here. I know I'm doing that a lot, but I just really want to hit these points home. Like I said, sometimes too many coincidences, too many bad things happen, too many stupid decisions happen that all coalesce into something that we've all been fearing for a very long time into happening. If all of that it's almost a mathematical improbability that all these mistakes lead to what everyone is feared to begin with, as if someone would have planned it in the first place. It's almost as if that's what was being done. Why on earth would you take the softer landing back then away for a much, much harder landing now? On top of, you do not raise rates until after you dump a bunch of money into the economy when you had no growth in the economy. So businesses weren't contributing to the banking system. They weren't asking for loans or money from the feds, but they just printed the money. Our government did that. They released that money into the wild, and all the businesses knew that money was coming in. And so they raised their prices, because now you're just printing the money. They know it's coming in. It wasn't even like a thought of, oh, they printed money so it devalues the dollar. No, they just knew all this free money was coming in. People were going to have some extra cash, so they're going to charge more to make up for all the time that they were not open during COVID. So you dump all that money in, cause inflation to rise rapidly. Then you come out of COVID and you instantly raise the rates before you can let the economy truly recover from COVID. And yeah, it's quite suspicious.
The global economies were too fragile. And we had some interest rate indicators that showed, this is going to sound insane, but that the Fed rate hike cycle should have been over before it started, meaning the 3-month T-bill shot through the discount rate, and usually that's been the end of a rate hike cycle. This time, they kept hiking into what I think was a global economic slowdown, and here we are. And that's why I think this time it's too hard for them to turn on the money spigots and prevent what's going to occur from occurring. I think it's beyond their control.
Okay, so we're starting to see cracks in the system. We're certainly starting to see strain.
I mean, you can't really even say they're cracks at this point. And it's about like those villagers over in Turkey, and they woke up and in the middle of their date field was a brand new geological feature called a canyon, about 30 feet deep. And what was it? Oh gosh, like 30 feet wide. They just woke up and yeah, just the earth had just opened up. I mean, that's about what we're seeing here. We've seen the cracks ever since 9/11. We saw how fragile the financial system was at that time. And all they have done since then is just make it far, far, far worse.
On the banking system, as you mentioned, we've had the collapse of Silvergate, Signature Bank, Silicon Valley Bank in the US, Credit Suisse flailing in Europe. Admittedly, that's always been a problematic bank, but we're starting to see major cracks in the system. What do you anticipate happening there?
Well, so let's analyze something that happened over the weekend. So Credit Suisse was married to UBS.
Yeah, shotgun wedding.
Yeah, a shotgun wedding. And apparently the banking authorities and the government decided to throw out their existing laws on their books and rewrite the rules. You only do that if what you're seeing is so terrifying, you decide to, discard the rule of law and make up new rules.
Yeah, so what he's saying here is that, under the current financial laws, these bigger banks, they're more like global banks. They're not quite like the Federal Reserve or central banks, but they operate just as, almost as big and as globally, such as like JP Morgan, Citibank, Bank of America, banks like that are not allowed to just keep coming in and buying up these, somewhat smaller banks, or even these like Silicon Valley Bank was a fairly large bank. They're not allowed to come swoop a bank like that up, because then it basically becomes like a monopoly. It's like Verizon buying up Sprint. And then who's left as a competitor, you know? Or buying up T-Mobile. So they're not allowed to do this, but the Fed doesn't want to print the money to bail those banks out because they're going to have to do it for a lot of those banks. So what they do is they relax those policies, even though it's against the law, and allow them to come in and swoop these banks up. And JP Morgan's been doing this since the beginning of the country. 1907 was like the first major crisis, which led to the direct development of the Federal Reserve. And that's what happened then. He came in and bought up a bunch of these banks, even loaned a lot of money to businesses, bought up a bunch of those, as well as, even I think New York State was in debt to him, and he put up 30 million of his own money in 1907. You can't even imagine what that money is worth now. I think I looked up what a dollar from 1914 when they started the Federal Reserve and printing money would be worth in value today, and it's worth about $140 of labor. One of those dollars back then. It's crazy.
That is a tell. So I'm an analyst. When the authorities violate their own laws, that tells me something, that what they're seeing is a big problem. So what I suspect, and I hope this unfolds, I hope they try to plug the dam, and it's a slow, controlled implosion, because speed kills. Speed will get everything out of control and has unintended consequences. So I think they're going to continue to play what I call whack-a-mole. They plug their finger in the dike. Everybody, breathes a sigh of relief for a couple of weeks or months, and then there's another problem, and then they whack, and then all the way down. I'm hoping that's the case.
That is the best case scenario, but unfortunately, what usually happens when you get a crack in a dam, you start getting water to come through, you plug that hole, and then another crack opens up, and you plug that hole, and then another crack opens up closer to where the other crack was, and they plug that hole, and then another crack opens up, they plug that hole, but while they're doing that, a crack forms in between the last two cracks, and then you get eventually a failure, right? And that could be what this situation is. It just might be one of them situations where they just dug themselves a grave, and by raising those interest rates, just put the nail in the coffin.
Because, to be honest, I don't want to see a fast panic. That's not good for any of us.
And is this a similar scenario then that you're forecasting for the U.S. as another bank potentially is on the brink of collapse? And then, as you say, regulators manage to sort of plug that hole while another one sprouts on the other side. So elaborate, paint that picture for us. What do you see happening in the U.S.?
The U.S. is going to be similar to what is going on in Europe. So the European Central Bank has problems. The banks in Europe have problems. So we're going to see the exact same thing we saw with Credit Suisse and UBS. We're going to see shotgun marriages. Unfortunately, the Wall Street Journal, again, I'm not trying to foment panics. The Wall Street Journal on Friday last week said 186 banks in the U.S., regional banks, are in trouble.
See, in my last couple of videos, I was trying to remember that number. I couldn't remember if it was 300 and some or 180 some banks. Yeah, 186 banks are in trouble. And I'm assuming when they are calling out these 186 banks, they're not talking about your local, credit union or your one-off credit union for your local area, or your local bank that only has like 2 banks in town and they don't exist anywhere else. I don't think they're talking about banks like that. I think they're talking about fairly decently sized bank, probably like one in my town is called Westgate Bank. There's also another one, First National, which they're fairly large. They're not just in this town. I think they're here and up in northern Nebraska, so up in Omaha and other places. So I think they're talking about banks like that, banks that directly probably are tied in and doing business with other smaller banks and credit unions, that if they go, they'll also drag them down as well. So I think that's what they're talking about there.
So if that's true, which I think it is, it's going to become increasingly difficult for them to stand alone, and there'll be suitors and shotgun marriages. Is my analysis, my prediction. And so the question I've been asked is, well, is this intentional? Well, I don't know, but it's going to end up in the same place. If you wanted to introduce a central bank digital currency, wouldn't it be better to only have 6 banks in the U.S., all systemically important, basically run by the government?
Yeah, so very easy for the government to control 6 banks versus all the banks. And then on top of that, they open up this Fed Now services that's business to business, bank to bank. Every business that is going to be a part of that Fed Now service would also have to be a part of those banks or doing business with those banks. And they're the largest bank, so they're probably doing business with them anyway right now. I mean, you're talking about probably Wells Fargo, Bank of America, Citibank, JP Morgan Chase. So if you only have 6 banks left, and what's funny is this is something similar that happened in 1907 that got the Federal Reserve even implemented in the first place. 12 major bankers and politicians got together, went down to Jekyll Island and drafted up the proposal for the Federal Reserve. Funny enough, yeah, it was the bankers that caused the collapse that wrote the policies and everything for the Federal Reserve so they could control the money easier to keep themselves from failing. And so to have 6 banks left, which would be easily controlled by the government and directly regulated by the Federal Reserve, which they're using their services and their currency only, with no cash whatsoever in any of the vaults. That's what you call control.
So it may not be a plan, but that's going to be what happens in my analysis. And if it is a plan, well, it's quite an evil plan. But again, I'm not in the room, but I see this unfolding.
And it kind of sucks that this guy has to keep saying that. You can tell just, by looking at him. We've been fooled by people who look like this, but he looks like a guy that runs numbers and looks at data and makes decisions with money, like a really good accountant. That's what he looks like. And when people like this are talking about this type of stuff that I've known about for 15 years or more, that's when you should get scared. Because when BlackRock puts out a paper that's predicting a major war, a civil war possible, or just an all-out societal unrest, these guys only deal with money. They want to make more money. They want to make their clients money. They don't care about the policies and everything that's going on. They don't care about gun rights. They don't care about none of that stuff, right? They don't care about whether gay people can get married, transgenders can use the same bathroom, whether people use pronouns or not. They don't care about none of that. They care about making money and making more money and making their clients happy, which makes them happy and makes them a lot of money. When they start talking about this type of stuff, that's when you get scared, because this means it's affecting their money. And that's why when they see their money getting affected, what happens when people's, especially large banks and large entities have their money messed with? What usually ends up happening? Very, very bad things.
Okay, let's unpack that a little bit before we start to break down the idea of a central bank digital currency, which for our viewers, as we've discussed on the show before, is a form of fiat currency issued by central banks, which is potentially programmable to work or not work in certain transactions and situations, and which also allows authority to monitor every single transaction made. But before we break into that dystopian endgame, which you say may or may not be by design, we said 186 banks are at risk of collapse.
Well, I wouldn't say collapse, but the Wall Street Journal pointed out 186 banks that may have problems. That doesn't mean they'll all collapse. But this number is from the Wall Street Journal.
Okay.
I don't want to be accused of fomenting fear and loathing, but that is reported by the Wall Street Journal, which indicates to me it's a serious problem.
So you're seeing essentially a consolidation of the banking sector, and I believe you've said that you anticipate 6 banks withstanding this crisis.
Yeah, the six U.S. systemically important banks, and I think it's Bank of America, Wells Fargo, Citibank, J.P. Morgan, maybe Goldman Sachs. I don't know. I don't have the exact name. I know there's the 4 big ones. J.P. Morgan being the biggest. That's what that seems likely. To be honest, I hope I'm wrong. I hope that does not happen. Will there be some regional banks left? Sure. I live in Hawaii. Bank of Hawaii does not participate in the capital markets. They loan to the state residents in the state of Hawaii. It's a very conservative, safe bank. People have been asking me if I moved my money out of the bank. I have not, because I'm not worried about the Bank of Hawaii. So there'll be some regional banks left, but the bigger ones are going to, I think, disappear. They're in trouble.
And why is this so problematic to economic freedom, to have this consolidation of the banking sector?
Well, so local banking is obviously better because you have a lot of bankers give credit based on personal relationships. And if you consolidate to 6 national banks, it becomes very formulaic. And those who are the buddies of the people at the top get the loans and everybody else kind of starves. It's not intended that way, but that's how it works. And so local banking is the lifeblood used to be the lifeblood of the U.S. economy. And it's at risk of going away. And it's going to be harder to get capital if you're a small business. If you're an entrepreneur, you're going to have to go begging to those who have all the capital. It's a consolidation of capital. It's too much money in too few hands. That's monopolistic. At least in the old days, you could get a loan if you had a good business plan and were an upstanding citizen and your local banker got to know you, they'd give you a loan.
Yeah, see, the really bad thing was about this is like you would never be able to have another Amazon come along or an eBay or another Walmart or Costco. It could never happen again if it comes down to that, because you can only imagine that the owners of Walmart, Costco, and big companies like that are going to have pretty good relationships with the banks, especially the big banks, because that's where a lot of the investments come from. And you can only imagine that if you as an entrepreneur start to blow up on the scene and you're a direct competitor to them, well, who do you think is going to, go to these banks and say, hey, we need to, do something about this? Well, all it takes is for them to get together and draft some type of policy that would directly affect your business, and basically they can withstand it. All the big companies love regulations because they can withstand the regulations and what it costs to, obey the law. The smaller businesses can't. They can't do it and make any money. It's just there'd be too much money. There's too much red tape. They just wouldn't be able to do it. They don't have the lawyers that the big companies do, that to find the loopholes that the big companies lobbied for in the first place, but the small business owner can never find. So that's why it's really, really important not to, as a society, get to this point where that would happen.
That's going to go the way of the dodo bird, and that'll have that's not good for freedom. That's not good for people wanting to take charge of their own lives. I've worked for giant corporations before, and I'd rather work for myself.
And you're saying the end game here then is going to be 5 or 6 major banks, which are then subject to more government control and oversight, effectively nationalizing to some degree the banking sector, which you say paves the way for the central bank digital currency to be implemented. So elaborate on that.
So I've looked into the central bank digital currency, and I've watched some of their members speak about it. The Bank of International Settlements, forget his name, made a speech about a year and a half ago where he basically said it's basically, in his own words, it's a way to control how the money's used.
Now, I hope anybody who sees this video at one time or another, I know you've heard that there's conspiracy theories about a cashless society and they're going to control us through the money and all that type of stuff, right? People have been yelling about this for I don't know how long. And, you know, I have this saying, you know, people will think you're crazy. You're crazy if you're ahead of your time. If you're right on time, you're a genius. Well, if it's after the fact, you're just stupid, right? And those are the 3 type of people that you got. Which, in fact, is kind of flip-flopped, isn't it? Because the person who said it way ahead of the time should have been the genius. And the genius that's right on time, he just had just enough time to make it happen. That he should just be the guy crazy enough to take the last step to do it. And the stupid guy, you know, is just the stupid guy. He's way too late and behind the 8 ball. People have been saying this since the Patriot Act came out in 2000 and, gosh, I can't remember when that was drafted, but after 9/11. After 9/11 in 2001 and the Patriot Act came out, this is the moves that they have been making since then. People have been calling it out. They thought, you know, a lot of people thought it was going to be just, you know, there's no more cash. It'll just be all credit cards. Well, that didn't quite happen because no one envisioned, you know, Bitcoin and cryptocurrencies taking the world by storm. But now that is the, you know, basically whoever created Bitcoin gave the government the best idea of how to control the money supply and how it's used. Gave them the greatest idea. They would have never thought of that. So whoever was the genius that created Bitcoin, basically laid down the foundations for this CBDC coin, these cryptocurrencies. And with everyone making their own cryptocurrency and stuff, you know, going wild, it brought a lot of attention to it. And you brought it to the government's radar and they're like, hey, we should do something like this because this would give us a whole lot of control. Not only that, we can keep track of all of it because despite what people think, cryptocurrencies are decentralized, but you can still track things through that blockchain. It's a lot harder. But if you have the keys to it all, well, there you go. And with a CBDC, they would have the keys to it. So, and they would be able to program it to use how they see fit. And that's the scary part. You wouldn't be able to just go buy whatever you want, and you definitely wouldn't be able to work under the table. You know, if your aunt gave you $50 for your birthday, you know, you could go spend that money and get whatever you wanted, and now you're going to get taxed on that $50. That's income.
Essentially. So what does that mean? Well, right now, $100 bill in your pocket, no one can tell you what to do with it. But if it's in the central bank and you happen to be a dissident talking about an issue that the state doesn't want you talking about, you can be targeted and have your ability to transact stopped.
Yeah, imagine this on top of what China has with the social credit score. Gosh, I mean, complete, total control, turning everybody into drones and robots that can't say anything. I mean, it's 1984 straight up. If you haven't seen or heard or read that book, you should do it.
There's also a myriad of social controls that could roll out. Let's say the state wanted to start worrying about cow methane farts and wanted to restrict the amount of meat that you're allowed to eat. They could impose quotas, and if they get what they want, the technology, your credit, everything will be linked. You'll go to the cash register, ring up your meat, and the woman behind the cash register or man would say, "I'm sorry, I can't transact this for you." It's total end-to-end control.
Yeah, and that's the thing. All they got to do is put into that programming that you can, because everything can be itemized into your bank account, right? If you have a system like this, every item can have its own unique marker that is tracked through a blockchain or something similar, and you have your own specific one, and it's tied to your account. You go to the store, you buy a steak, and more than likely they're going to be using some sort of AI system or automated system where you buy that steak that's ran through that currency that takes a check mark on your account, says you bought one steak for the month. I mean, it's just like you can go in there and see where you spent money and dang near almost on what, right? It's going to be like that. It's like that one where you can scan all your receipts and it just keeps it all in a database and you can just look up where you spent that money and all that stuff. Those systems are already out there. Half of those systems are government funded, so you could roll something like this out, right? They get money and grants and stuff from the government and help develop the technology. And then they send in a bigger company that, is really buddy with the government, or like someone like DARPA or something like that, and they come swoop that company up and get all that infrastructure for that little bit of money they invested into getting it going, and now they have it, right? And so anytime you scan at the store right on the spot and you use your CBDC, boom, instantly check mark, you bought a steak. The next one, because they're not going to tell you can only buy two. I don't believe the government would ever do that because they have to leave loopholes for rich people. But they'll do something like they do for rich people. What would it be? Probably charge you a huge tax on that next steak. Let's say that steak was $12, and they charge you a little bit of carbon tax on that first one. That second one, that's over your quota for the day or week or whatever it is. Well, now you got to pay $40 for that one. Well, you're not going to pay $40, so you're only going to have access to one. And so you're not going to be able to enjoy any of the food that you want because they're going to tell you what to eat. Just like those sugary drinks they threw that tax on, stuff like that.
That's what it is.
Yeah. It's a very Orwellian scenario, but as you say, when the government is able to monitor your spending and program a currency to work or not work to enact certain transactions, or perhaps put a premium on, if it's like, hey, you've flown 20 times this month, for argument's sake, you've exceeded your carbon footprint with that regard, this doesn't work. And to buy another plane ticket, or it does, but with a premium attached to that.
Not only that, every ticket, that's probably like 20 for the year, right? And you had to do in that 1 month for your job or whatever it was. If you're an entrepreneur and you're meeting with clients and things like that, you'd have to pay that premium for the year now because you already used it all in 1 month, all your carbon footprint for the year. And that would put a hamper on what you can do for the rest of that year. Just crazy.
But what is the timeline that you're anticipating for these banks to collapse? Because you said a controlled implosion. So for these banks to collapse, for there to be a consolidation, and then for CBDCs to be rolled out, essentially, roughly over what time period?
If they're going to control it, they need 12 to 24 months.
That's it?
Estimate. Yeah.
24 months before we're down to 6 banks?
If it's controlled properly.
That's the controlled version. Okay.
Yeah. If it's fast, then chaos is unleashed, and I don't want to talk about that. But look, there's already executive orders been written by Biden about the CBDC. There's already white papers from the Fed. Things are rolling faster than I would have thought. And look, if I was a central banker and I wanted to introduce a central bank digital currency, I would do it at the bottom of a crisis when everyone's begging for relief and everyone's in fear, and then offer the solution. That's what I would do. I'm not saying that's what they're going to do, but if I wanted to get everybody on board, I would do it at the bottom when there's maximum amount of fear and people want to look to an authority to save them. That's classically how these things are done. That's how these things are done.
Is the implication then that this is by design?
I have no proof, but what I see going on is inevitably going to be that, as it may. I'm not in the room, but yeah, it's certain. You could speculate that it's by design, and you wouldn't be crazy for saying so.
That is because there's no. It's almost a mathematical improbability that all of the dumb things that have happened from the inception of the Federal Reserve, the policies that have been put out, the whole disaster, the way they've handled our economy for the last 14, 15 years, all the bad decisions and mistakes. No way. No way. I call bullshit. Again, guys, we have got to start seeing these things far before we get to this point. We got to start taking a look at the data, the underlying data that's telling us, yelling at us that these things are happening. And we got to stop just completely dismissing people just because we don't want to hear bad news. People have been talking about this for a long, long time. I've known about it for 15 years and I'm a dummy. And I've been talking to people about this. And people ask me, did you hear what Trump said this, Trump said that, or Biden said this, Biden said that, Obama said this. Honestly, I don't care about what they do. I haven't cared about a president. I haven't even voted. It only took me 2 times of voting to recognize what was already going on in our political system at the age of 18. I knew what was going on. I discovered that on my own. I voted twice in my life. And I voted for the people who I thought were for the people. Now, I was naive at the time. And honestly, I voted for the 2 candidates I thought would make a change from the current course that America was on. Little did I know that, or, if everyone thought about it really, really hard, there is no such thing as a 2-party system in this country. On the outside, there is. But that's all a facade, right? Why do you think all these issues that have been trying to be resolved since the beginning of the country just never get resolved? It's simply because they don't want to. Every law that's ever been passed has had both sides pass those laws. Every gun right that's been taken away, every gun law that's been passed, people are always talking about the left are trying to take the guns. They will never be able to do it without the Republicans' help. And you have both sides working together to pass all of these laws. I'm pretty sure Obamacare didn't get passed with just Democrats. Republicans had the House, Senate, and presidency for the first time in a very long time. They didn't get rid of it. I mean, once you give people free stuff and you take it away, well, then you just look like a monster. So what do you do about that? But in the end, after 4 years, nothing got done. Nothing got repealed. It's all still there. I'm going to go ahead and end the video here. Believe it or not, that video is only halfway over. So I'm going to do a part 2. Just didn't want to make this one too long. Thank you guys for stopping by, taking a look at the video. Please don't forget, go ahead and drop some comments below. Give me some ideas. I want to have a discussion with people. So if we could talk, let's do it. If there's something that you guys really want me to talk about or are interested in, we can do that too. But I really want to try to focus on these underlying things. Our podcast, Sardonic Wisdom, I just got it dropped tonight. By the time you guys see this, probably last night. If you guys have some new information for me or a video for me to check out, go ahead and drop it in the comments below. I really appreciate it. And again, don't forget to hit that subscribe, leave me a comment, go ahead and share this with anyone you can, because this video is very important. I want as many people to see this as possible. What's it gonna take to prove to people that this has been talked about and been a long time coming? It's gonna take all your brain power. It's gonna take all your knowledge. It's gonna take all you got.